This is Let's Talk Energy, your go-to podcast for smart energy insights. I'm your host, Noah Brenner, and each week we're bringing you an inside look at the dynamics shaping global energy markets through in-depth conversations with our own Rystad energy experts, as well as some special guests. In today's episode, we're digging into a hot new source of U.S. natural gas production that could help meet the country's rising domestic demand and fuel the growing LNG export business, the Western Haynesville. While the Haynesville Shale will be familiar to many in the industry, having been among the top U.S. gas-producing areas for more than a decade, the Western Haynesville is a new place, geographically, and covers new ground, pun intended, geologically as well. With a long queue of new LNG export facilities underway in the U.S., there's a growing buzz that companies exploring the Western Haynesville could be in the right place at exactly the right time to capitalize on this additional demand. But first, they'll have to push the boundaries of technology to cut costs and prove that the performance of these expensive and technically challenging wells can be repeated over hundreds or even thousands of times. So, how has the Western Haynesville evolved, and which companies are actively exploring in the area? What questions remain about the play, and how can it become a commercial success? And finally, what do these developments tell us about the state of U.S. onshore exploration today, and are continued shale production gains expected that could help meet both domestic and global demand? To drill down into all of these questions, I'm joined from Houston today by Matthew Bernstein, a vice president in our analysis division who heads up our coverage of U.S. shale. Matt, welcome to the program.
Thanks, Noah. Excited to be here.
Well, let's talk energy. The Western Haynesville is a play that you've been following for a couple of years now, and I want to talk about some of the latest developments there in just a second. But first, let's get some of the basics down and really kind of place people into this. So where is this play? I mean, is it just the western part of the Haynesville Shale, traditional Haynesville Shale? And what's the geology like?
I think it is kind of important to dispel some of the maybe misnomers there. I actually think maybe Western Haynesville, it could have been a different name. It's actually, so it's the farthest reaches of the Haynesville and Bossier shales. So the actual rock there, the farthest step outs, you can call it. But geographically, it's actually quite far away, relatively speaking, from what you would call the legacy or the proper Haynesville, which is more in the northeast corner of Texas and the northwest corner of Louisiana. So this a couple hundred miles away, Western Haynesville Basin, you can call it. So it's about, I'd say, let's see, I'm sitting in Houston now. It's about 150 to 200 miles north of here, up I-45. It's in Leon and Robertson counties, stretching a bit into Freestone and Anderson counties. So this is a good way out of the legacy Haynesville. So important to kind of, lay that groundwork there. And then in terms of the geology, what's really interesting is that the legacy Haynesville play, the Haynesville Bossier Shale, has really been considered for a long time to be one of the toughest places to drill and frack wells in the United States. It's extremely relatively deep landing zones, very overpressured reservoirs, very high bottom hole temperatures, and essentially the Western Haynesville portion basically takes all of these factors to the extreme. So really compared to anywhere else in the U.S. lower 48 shale patch, these are very deep landing zones. So 17,000 to really 19,000 even feet below the surface, and just extremely tough conditions to drill and frack wells in, extremely high pressures, extremely high temperatures. So really kind of pushing some of these factors to the extreme. But again, it is the Haynesville and Bossier shales to its farthest reaches out west.
How has this play evolved? I said you've been watching it for a couple of years. I know the first commentary you wrote about it was, I think, 2023. And so, what kind of happened then and what's happened through to today?
This area, geographically actually has a long history of hydrocarbon development. Oil and gas wildcatters, you can call them, have been kind of drilling wells here for decades. A lot of vertical development in the Cotton Valley Formation. You even have a bit of some of the Eagleford Basin stretching up to its kind of farthest north reaches in this area, and you have some formations like the Austin Chalk, Woodbine, which are more typically associated with the Eagleford of South Texas. But really, the development of the horizontal development of the Haynesville and Bossier shales there is a much newer factor. Comstock Resources, which is kind of the leading delineator, you can call it, or leading developer, actually probably better to call it leading explorer, of the play, drilled its first well there in November 2021, and turned that well to production in 2022. So kind of as you alluded to, it wasn't really until late 22, early 23, where we first really started to kind of notice well results coming in. And as someone who's followed the Haynesville Shale for many years, it was quite interesting to see, some well data coming in to our numbers, with Shale being targeted so far outside of the proper basin. In Canna, which is now Ovintiv, they tried drilling some wells there earlier, earlier in the 2010s, but really it was not until this Comstock well that was drilled there in late 2021 did this really become a thing, you can kind of call it.
And that well, I mean, the results caught your attention because they were giant.
The first few wells there, I mean, that's really where this started getting, within kind of, the industry, you could call it. We really started looking at it. Of course, now this is something that's honestly grabbing quite a lot of broader media attention. But exactly, it's really the scale of production from these wells. So these wells, some of the first couple wells that had been drilled there, but even going into some of the newer wells that have been able to keep up these results, these wells are peaking at 25 to 30 million cubic feet of gas per day. By contrast, typically that would be something below 20 million cubic feet per day in the legacy Haynesville, which is already one of the thought of as one of the most highly productive natural gas basins in the U.S. What's really astounding is not just the incredibly high initial productivity of these wells, but the fact that they're able to effectively maintain this production level for production rate, you can call it, for several months on production. And that's really not something that we've seen, where these wells are effectively, staying at this rate. Typically, if you think of what we would call a type curve, basically the production pattern of a shale well, you have a high initial production and then a quick decline and then a kind of tail off. But these wells have really been able to avoid that quick decline in the first year and really be able to produce this level for many months. So, if some of the anecdotes, that we started hearing back in early 2023 was that some of these initial Comstock wells had actually blown out the full, midstream capacity of the region. And you actually, if you look at the data, the production then falls to zero for a month. And it's really something that you don't typically see in other places. So that's really what kind of caught our initial attention and has now really been, something that has captured the attention of both, those looking at U.S. shale, but even more of kind of the broader, media or business coverage in the US.
You're talking high pressure, high temperature, really deep wells. So, I mean, what are the well costs? How much does it cost to drill one of these things? And are they making money at today's prices?
The initial wells that were drilled in the play, almost $4,000 per lateral foot of drilling. So that's typically how we think of well costs in the shale universe. These are lateral wells, or horizontal wells. So you typically measure it on dollars per lateral foot of the lateral length of the well. And to put that into context, the average Haynesville legacy Haynesville well is roughly say 1,300 to 1,400 dollars per lateral foot. Even during the height of the inflationary period around 2022, when we saw well costs really go up, you rarely saw anything above, say, 1,800 or $2,000 dollars per lateral foot in the Haynesville. That's now largely come back down. And if you look at some other well-known U.S. shale plays, for example, the Permian Basin, most wells there are under $1,000 per lateral foot, some even towards 600, 700. So really, when you compare that to $4,000 per lateral foot, with a lot of these being 10,000-foot laterals, you're really, maybe not all the way up to $40 million if some of those were shorter, but you're in the $30 million range, which is just really not comparable to many places in the U.S. shale patch. And again, keeping in mind that the Haynesville, the legacy Haynesville, is already thought of as one of the more expensive places to drill in the US. So, if you're starting out at that $4,000 per lateral foot area, we've seen some wells now come closer to 3,000 and even below. I think Comstock, which is the only public operator that reports results that's drilled there so far, they've reported some closer to $2,800, $2,900 per lateral foot. So you could roughly say that's 28, 29 million per well. But still, it's an extremely expensive well. But again, as you alluded to, the trade-off is with the astounding productivity that you get there, and the fact that these wells are producing more in 2-3 years on production that some wells in the legacy Haynesville may even produce in their entire lifetime of activity. So if you factor in the economics of that, what we're looking at right now is roughly for say a $30 million well. If you're looking at say a 20% discount rate, which may be harsh for a exploratory play, but that's typically how we evaluate, I'd say at this point, competitiveness of shale returns. You're still looking at a break-even price of over $4 per MMBTU on a Henry Hub scale, and that's comparable to a price closer in the low $3 range in the legacy Haynesville. So I think that there's still a ways to go to fully make this a competitive resource, but certainly the ingredients are there from a productivity standpoint, and really a big question mark is just how much further can you push down those well costs.
You mentioned Comstock a couple of times, public company, but primary owner, I believe, is Jerry Jones, the owner of the Dallas Cowboys, and he certainly has a lot of things to say about this play. He's been quoted pretty broadly, and he's pretty optimistic. Surprise, surprise. But there's some other companies there as well. Could you just talk to us about who's drilling and kind of how they're thinking about this play?
Comstock's presence there, and of course, as you mentioned, Jerry Jones, it's kind of really added to, I'd say, the star power of the play, kind of getting attention in the national media of a very public figure, beyond the actual kind of, maybe you can say, shale nerds or shale industry, who might just typically be looking at this. I mean, anecdotally, I actually had a friend who has no connection to oil and gas industry who sent me a text asking, is this a real thing? Because they heard about Jerry Jones. So, quite an interesting kind of a celebrity moment there. But yeah, so Comstock's an interesting company. So it's a publicly traded E&P. They've been around for a while. They've been kind of one of the core pure play Haynesville operators. So they actually acquired this acreage in the Western Haynesville via their acquisition of Covey Park back in 2019, which was a private E&P. But now that gas prices have recovered, actually, it just saw this morning, the front month Henry Hub curve is at $5 per MMBTU. I don't think I've seen that number in a long time. Now that we're actually getting these higher prices, they really have a core advantage in that region now. So production is up to 500 million cubic feet per day, about in the Western Haynesville. There's been 60 plus wells drilled there so far, and a lot of that is Comstock. So they're really the leader there. But like you said, there's been some others who have kind of slowly entered in. So you have Aethon, which is a private E&P. It's been focused on the Haynesville for a long time. They've drilled a good amount of wells there, some of which have had very strong productivity, right up there with Comstock's numbers. They have a smaller position, but it is kind of in that core, and they've kind of been running a rig off and on there. So that's a company that there's been some rumors of potentially selling their legacy Haynesville assets, looking to recapitalize. And that's a company that's had some very strong results, but they've been maybe a bit less of a quick developer as Comstock. You have the new entrants. So you have Mitsui, which is a Japanese firm. There's been a tremendous amount of interest over the past few years of foreign firms, specifically Japanese buyers, entering into the U.S. shale gas patch. Several of them, Osaka Gas, Tokyo Gas, in the legacy Haynesville, as well as JERA, which just entered in the Western Haynesville. Mitsui, they acquired, the mineral rights from two very small private E&Ps there, or I guess not just the mineral rights, but the acreage itself last year. And they've drilled their first few wells there this year. So we're still waiting to see the production results from those wells. But they have they have drilled those wells. And then lastly, and perhaps somewhat most interestingly, you have Expand Energy, which has kind of maybe, dipped its toes in the water here. You can say Expand is one of the largest publicly traded U.S. natural gas focused firms. So that's a company that's, traditionally been more of a, I guess you can say, disciplined, more typical public E&P. But even they just announced in their recent earnings that they have kind of dipped their toes, like I said, into this new play, got a position. There haven't been any wells turned to sales there yet. But they do have a position kind of on the furthest eastern edges of the play. So that will be really interesting to see kind of how they're able to develop that area as well.
U.S. natural gas demand. Gas demand this year is going to average about, I think, 107 billion cubic feet per day on average, something like that, I believe. Correct me if I'm wrong, but it's set to surge. And there have been a lot of discussions around this, and it's driven by these LNG export projects that have been approved along the U.S. Gulf Coast. Not coincidentally, I should say, some of which have been backed by these Japanese firms that are actually going in and getting access to this gas. And so, how much demand are we forecasting to come online from these new LNG projects?
We kind of think of the post FID, so it's final investment decision. So effectively, LNG projects that have already been sanctioned, already been approved, through 2030, there's upwards of 10 billion cubic feet per day of additional natural gas demand from these startups that are expected to happen along the Gulf Coast that have already been sanctioned. Beyond that, into the early 2030s, you get an additional few BCF a day, up closer towards 13 or so. And again, that's just post FID projects. So depending on how other development plays out, whether additional projects get FID, where the market goes from here, that's a large wedge of what can effectively be thought of as our base capacity of demand additions for U.S. natural gas. Of course, there's plenty of other chatter around, domestic consumption from things like AI data centers. Of course, that's something where, there's other sources of, power for these types of projects. But even with completely excluding that other aspect of rising U.S. natural gas demand. Just the post FID projects alone will add, again, upwards of 10 BCF a day of capacity over the next few years, which is really a significant amount when you kind of consider the lull that we've had over the past few years, and really kind of the lack of strong growth on the production side in U.S. Natural gas.
Could we get the gas that we need to meet that LNG demand from the legacy Haynesville, from the Marcellus, giant play in the Northeast, from the Permian, where there's a lot of gas that comes out with the oil that's produced from these wells? Um, what's the call, I guess, potentially on this?
That really brings us to kind of a larger macro question surrounding, I guess, the future of, U.S. natural gas production and really U.S. shale development. And it's something really that's on everyone's mind in the industry as we're thinking about where will things go from here. So I like to kind of put it this way. So U.S. natural gas shale plays and U.S. oil focused shale plays have extremely similar structural challenges, or you could say maybe subsurface challenges. They both, have seen issues around productivity degradation, core inventory depletion, and very high degrees of consolidation, where very large public companies, super majors, have come to control a lot of this position here. And a lot of times those companies, maybe with the exception of Exxon and maybe BP, are not ones that are very, wanting to skyrocket production. So that's one side. On the other side, whereas U.S. oil competes in a global market where you're competing to be the lowest cost barrel with, OPEC, with Latin America, with the North Sea, with all these other regions, U.S. natural gas is an isolated market that's only linked to the rest of the globe via the LNG. So what happens is as you get more demand for natural gas and potentially a more expensive resource in the legacy plays, that's a call on prices to rise and hopefully incentivize that development. So there's a lot of kind of moving pieces here when you think about it, where yes, in the legacy Haynesville, it's very well suited geographically to meet some of this demand. There are pipelines being built to the Gulf Coast, but we have witnessed some degree of core inventory depletion and productivity degradation in the legacy Haynesville. Legacy wells there start to break even at higher prices than perhaps in the Western Haynesville. It's not something that we've seen yet. And to be clear, we do still see a lot of production growth coming from the legacy Haynesville. But it certainly, we don't think that it can fully meet this demand alone. In the Northeast, you mentioned the Marcellus region. That's an area, it's a massive geographic play. So, hypothetically, there's a lot of development that can occur there. But again, that is an area that is very constrained by takeaway capacity. There's not enough pipelines in the region to export that gas to market, and certainly not to the Gulf Coast. So despite some strong economic resource there, it's not an area that we see undergoing kind of a high growth development. And then lastly, the Permian. And I think that's really an area to watch because, even as you have $5 Henry Hub right now, we still have extremely low, sometimes on a day-to-day basis, even negative gas prices in the Permian. And that's due to the fact that you're drilling for oil, you're producing associated gas as a byproduct, and there's just not enough pipelines right now to take that gas outside, take it to market out of the Permian. That said, there are some pipelines that have been FID'd there, and we do expect those concerns to alleviate over the next few years, and potentially even to the point where there could be very commercial gas-driven development in the Permian. So that is a factor to watch here, and that is an area that could potentially be a very economic source of gas, in addition to, the West Haynesville and other sources.
We used to see a lot of exploration. I used to be able to rattle off, a number of different plays that were being explored in the U.S. onshore, and a lot of them didn't necessarily pan out. And then we didn't see a lot of exploration. I mean, I guess so. Why is that we haven't seen a lot of exploration in the U.S. onshore? Are we perhaps poised to see more moving ahead?
So instead of exploration, where effectively you're getting you're both investing capital upfront to explore, and you get that return a bit later on. We're seeing companies prefer M&A. So we've called this the kind of Shale 4.0 wave, because what you're doing is, you're both acquiring an asset, but you're also immediately acquiring the earnings and the cash flow that asset produces. So, it's a bit more of a disciplined way of developing a business. And that's really what we've seen on the oil side. And I think that globally that there is, I remember it was talked about on the first episode, I think, of the podcast, potentially a call for, global exploration. I think within U.S. shale, I don't expect you're going to see that as much. On the oil side, I think, companies have looked elsewhere into potentially Argentina, into the Middle East. But really, it comes down to this natural gas story that we talked about. And I think right now, everything is kind of on the table of how do you meet this growing demand, and if prices run up high enough, can you extract enough from the legacy plays? Can you perhaps commercialize some older, more mature oil basins for their associated gas, where maybe you don't have these very productive wells, but you do have lower cost wells? So I think everything's going to kind of be on the table there, and it's really going to be a question of, okay, where can exploration be, as economically viable as, potentially legacy, less productive sources of gas. So I wouldn't say we're calling for a new wave of gas exploration, but I certainly think you're going to potentially see some more development in areas such as the Rockies, perhaps some of these deeper zones in the Permian Basin that I alluded to, and really a focus on, where can you start to develop this gas?
So let's talk about some of the questions that need to get answered in terms of the Western Haynesville. First, I mean, do we know actually where the fairway of the play is? Do we have an idea of where this can be developed?
Yeah, so right now we've seen really all the wells that have been started in the play so far in a kind of narrow stretch in Leon and Robertson counties, that can kind of be thought of as the core of the play. But really the play is quite large, and Comstock has reported over 500,000 net acres, I think over 700,000 gross, and that really kind of covers, I'd say, what we think of as the full extent of the play right now. You've also seen Expand's acreage position much kind of further to the east in Angelina County and Houston County. Can the productivity remain? Can it keep up what we've seen so far? Can it improve potentially? But more importantly, can it be replicated outside of this narrow fairway that has been developed so far? So, it's going to be very interesting to see the results of Mitsui's wells when those are turned to production, maybe in the coming months, maybe in next year, since we know they have drilled them, and then eventually what maybe Expand's wells look like, where you're seeing the play pushed a bit further outside of this core area so far, and whether those results can be replicated there, or whether it's really constrained to that narrow area, in which case, the potential production would be, much lower than, what you would consider if you replicate that across the entire basin.
You mentioned infrastructure as well. Can this gas get to market with current infrastructure? Do you need to build some pipe?
it's not the same situation it was, as I alluded to back in, 2022, where one well blew out the entire system. Comstock has kind of developed this pinnacle gas service midstream unit in the area with some investment from private equity. I think it's Quantum Capital. But there are connections. There's storage and connections to some pipes going to the Gulf Coast, to the kind of Houston area. But the access to those pipes, it remains to be seen, whether this is something that, right now Comstock is certainly in the lead for. And as, some of these other, well, as and if some of these other operators really kind of enter full scale development mode, where that gas will be connected to. So I think the situation is certainly, improved. There's a lot of pipelines running through that area. It is, again, a naturally advantageous area where there's, a long history of hydrocarbon development. You have pipelines coming from the Permian to the Gulf Coast. So, again, though, it remains a question of, when those wells are actually started, can you hook that up to, pipelines to gathering lines, and commercialize that? Because again, I think that all else equal, you have the potential for some, favorable realized prices in this region, but it will need to be a continuous build out for sure.
Let's say that these companies get this right. Let's say that they're able to lower costs. Let's say that the well results prove repeatable. How big could the Western Haynesville get? I mean, how material is this source's supply that we potentially could see?
Say an 8 rig program, which is not too far off right now. Right now, Comstock has announced they're running 4 rigs next year. You can assume, maybe Aethon and Mitsui will run 1 rig. You're already around 6 there. If those companies, those other operators, go into a more full scale development mode, it's not, I'd say, crazy to see potentially an 8 rig program there. And I think in a lot of ways, assuming things go right, it is almost a base case. Or a reasonable case, I think you can call it. So in that case, I think by, over the next couple of years towards 2030, you could see upwards of 2 billion cubic feet per day of gas being produced out of this region, which I think is, right now we're at about half a BCF a day. And I think that really, if you get that full scale development, you get replicable well results, you're looking at potential for some pretty considerable growth. If you go up to, say, a 12 rig program, which again would be more synonymous with this actually going from a core or an exploration asset to a core asset, you're looking at even much higher. So I think that, we can think, if things go relatively well, you can grow up to 2 BCF a day over the next, I guess, 4 years or so. And I don't think that's too far fetched. And beyond that, again, there's potential to go much higher. So I think that if this resource that we've seen, these well results, are replicable, costs, continue to improve, you're looking at a lot of growth potential out of this region.
What is it that you're watching over the next year? Is it well results? Is it potential M&A? I mean, if you had to dust off your crystal ball that time of the year, of course, what is it that you're interested to see in 2026 from this play?
I'm very curious to see what those initial Mitsui wells will look like, what some of Comstock's wells will look like that are a bit outside of the core fairway there, and see if those results can hold that we've seen so far outside of that main area. And then beyond that, I think that it's probably a bit too early for, I don't think anybody's going to be, taken out if the company's already there. I think that certainly right now it's more of a attractive, relatively low cost of entry, or it has been, area to develop. And to explore. I think that another question is, who else enters? If you had told me 2 years ago that Expand, one of the, largest publicly traded firms that operates, typically in a much more, I'd say, traditional manner of a public E&P, that they were, kind of looking at the Western Haynesville and buying some acreage there, that would have surprised me. And I think that really speaks to how much it's already proven a success relative to, the initial wells that were drilled there and not really knowing what you were going to get. So I think I'm really interested to see who else enters there. Again, Comstock has a lot of that acreage. Is there much more potential? It's hard to say. But, are you going to see potentially some other Japanese firms there? Are you going to get some other publicly traded gas-focused E&Ps entering? I think that's something that I'm really eager to watch over the next year.
Well, Matt, thank you so much for joining us. I think we'll have to check in maybe in a year and see where Western Haynesville goes.
Yep, perfect. Looking forward to it.
Let's recap. The Western Haynesville could become a significant new source of U.S. natural gas supply at a time of rising demand, but significant questions remain. Companies trying to prove up the play need to show that their monster well results are not only repeatable across a broader area, but also that they can drive well costs down to be competitive at realistic natural gas prices. Nevertheless, the Western Haynesville play is yet another example of how hard it is to predict the evolution of U.S. shale and its impacts on both domestic and global energy markets. Thanks for listening to Let's Talk Energy. This podcast is a production of Rystad Energy, produced by Laura Rodriguez-Skaug and Bada Oak. Check out the show notes for further analysis of the topics that we've discussed today, and connect with us on social media. We're at Rystad Energy on all your major platforms. While you're there, please leave us a review, hit that subscribe button, and give us a like. You can also keep up to date on our website. If you'd like to send us questions or reflect on today's show, maybe you've got an idea for another episode, email us directly. It's podcast@rystadenergy.com. And most importantly, don't forget to join us next week for more Let's Talk Energy.